Okay, we're live.
Hi everyone, welcome to the My Locum Manager and BHP Chartered Accountants IR35 tax webinar. Now, the new changes to IR35 legislation is being implemented in April, and it stands to affect the way in which locums are paid and how they're taxed. So we're here to inform you of these changes with BHP Chartered Accountants, and we hope that it's going to help prepare you better for these changes that are coming in place and give you an idea of what you need to do going forward.
Next slide, please.
Right, so just a bit about My Locum Manager. My Locum Manager is an online accounting toolkit and organiser which takes care of all your locum admin. And it automatically does all your invoicing, pension forms, expenses and tax submission on any device that you choose to use. Our resource centre is extremely popular and helps to prepare you for life as a locum GP and helps to support you through that process. And we're passionate about supporting locums, be it with discounted CPD off Redwell update courses or free webinars on topics that affect locums like yourselves. And if you're interested in accessing these, then you can like us on Facebook or sign up to mylocummanager.com so you can have free access to these whenever you need. Our partnered accountants help give our locums support and advice. The webinar today will be approximately 60 minutes, and that will be 30 minutes for the presentation and 30 minutes for your questions. So there's a box on the right, so feel free to start messaging in your questions. I'm going to take a note of them and present them to Christine, who's taking the talk today, at the end. Now, in tonight's webinar, we hope to cover what the IR35 legislation is, who it's going to affect, as well as key points that you need to know to ensure that you're working in line with the HMRC. So feel free to take notes, and we hope that it will help to prepare you for the new changes ahead. So without further ado, I'd like to introduce you to Jenny Hurst from BHP to begin the webinar.
Thanks, Serena, and hello everybody. For those of you who don't already know BHP, I'd just like to tell you a little bit about us. We're a large independent firm of chartered accountants, and we're ranked in the top 40 firms in the UK. We've got 27 partners and over 300 staff currently. We're also members of AISMA. AISMA is the Association of Specialist Medical Accountants. We've got a large healthcare department. It's headed up by myself and Colin Hoare. Colin's also with us tonight. And we've got 30 staff working full-time on our healthcare clients. We act for around 100 GP practices and 450 locum GPs spread over a wide geographical area. We also run a finance course for ST3s in 13 different locations throughout the UK, and many of the ST3s that we teach move on to become locum GPs. The size of BHP gives us the capacity to offer specialist services to our GP clients, and for example, we have a number of experts in the NHS pension scheme. We've got a highly experienced VAT team who advise our VAT-registered GP practices and individuals. We also offer a payroll bureau and auto-enrolment advice, but tonight's webinar is really all about our employment taxes team. So I'd like to introduce Christine Robinson. Christine heads up the team. She's had 20 years here at BHP. And prior to that, she spent 9 years working on the other side with HMRC. Christine's particular specialism is disputes with the revenue over employment status, and she's been dealing with IR35 since it first started back in 2000. So without further ado, I'll pass on to Christine.
Thanks for that, Jenny, and hello everybody. Thank you very much for logging on this evening. We already know that we want to talk about the new IR35 rules that are coming into play this April. to get us there, I thought we needed to get back to what is IR35, the original set of tax rules, and then we can look at the changes that are going to come in this April. We also want to be covering how the new rules will affect agencies if you work through an agency. And then I wanted to just mention the key players that are affected by this legislation. But the most important thing, I think, about IR35 is to talk about employment status and how do you make that decision if somebody would have been an employee if they didn't have a business that they were working through. And that really is what IR35 is all about. It's an employment status check. After we've gone through those, we've got some questions that I'm hoping to get through before answering any of your questions that might come through the webinar. And it's really, do you have to accept the position? And then what happens if you're a sole trader, or if you're a locum going through an agency, limited company? What if you get work through an umbrella company? And what can you do if the person that you're providing your services to, this GP practice, decides that yes, you are affected by the new rules for IR35? So we really do need to get back to basics, because I've said IR35 is all about employment status. In the UK, people pay tax, their income tax that is, either as an employee through pay as you earn, or through self-assessment if they're self-employed or a sole trader. The tax rules aren't the same, but there's enough similarities not to get too bothered about it. But where the difference really lies is with national insurance contributions. So I'm an employee of Barbara Harrison and Platt, and I pay national insurance contributions on my gross pay, and it's worked out at 12% from me, but my employer has to pay an additional 13.8%, and that's the employer's national insurance contributions. If I was self-employed, I'd be paying Class 2 national insurance, and that would cost me £2.80 a week. And then once I'd finished my accounts and worked out my taxable profit, I'd be paying Class 4 national insurance contributions at the rate of 9%. You can see there's a really big difference on the cost of the national insurance contributions if you're self-employed compared to if you're an employee. And in recent years, the government, that is to say the revenue, has been a little bit more obvious about talking about national insurance contributions when they call them tax, because to a certain extent we do look at national insurance contributions as another kind of tax. And the revenue has always been bothered about whether somebody should be properly treated as self-employed or whether they really are an employee. And it's always been because of this difference to do with national insurance contributions. So although the revenue has, when the revenue come out to do a check on an employer, they'll always look at payments to somebody who's been treated as self-employed. A few years ago, there wasn't too much they could do about it other than ask the questions and then give their opinion and then have the conversation, which could drag on for a number of years before it ever came to any kind of resolution. What we've been seeing going back at least 20 years, if not longer, was savvy people who realized that they could actually set up their own businesses, and by doing that they could pay themselves at a very tax efficient rate. And this is where we come into the IR35 equation. So if you had somebody who is self-employed, as I said, we've got the national insurance rates that I've given to you. I've already said that if you're an employee, you're going to pay employees and employers' national insurance contributions. But if you're a director, you're also considered to be an employee. So on the face of it, you're going to pay national insurance contributions at the same rate as an employee. But as a director, especially if you're the major shareholder in that company, you can choose what to take as your salary. And if you take a modest salary, but you still want to take other money out of that company, you can take a dividend. And a dividend is not affected by national insurance. So you only have to pay tax on it. So you've got a saving straight away there. And that's really what's been happening in the last 20 to 30 years. Professional people have been setting up small limited companies. They're the directors of those companies. They've paid themselves a modest salary, paid the tax and national insurance on that, and then they've topped up with dividends, and they don't have to pay national insurance contributions on those dividends. And it got to the point where there was quite a lot of status cases heard by commissioners. There was quite a famous one many years ago in the 1980s where a barrister who was employed by Chambers he was employed by a Chambers, and he stopped work on Friday as an employee, came back to work and did exactly the same thing on the Monday, but this time he was running it through his own personal service company. The Chambers paid his business, and so they paid him gross, and he chose how he would be paid. And that's the kind of thing that brought us into the original IR35 rules. So they apply where we've got this business that sits between the person doing the work, the worker, and their client. And in the example on the slide in front of you, the client is a GP practice, and we've got a limited company where the GP locum is working through. The GP practice pays the locum's company, and then the locum's company decides how it's going to pay the locum. So IR35 at the moment, if you have this situation, you've got this intermediary business, the director has to make the decision. They have to decide whether, if their business hadn't been between them and their client, if they had been were working as if they were an employee, then they would have to deduct pay-as-you-earn national insurance from the money that they took from their own company. And they had to make this decision for each contract that they did. The changes that are coming through this April, there's two new things here. The major one is that decision-making responsibility is going to be taken away from that intermediary business, and it's now going to sit with the end client, as long as that end client is a public authority. So the two legs of the test that we have to look at now is there an engagement between a public authority and an intermediary business, that GP's limited company that I mentioned before, and does the worker from that intermediary business provide their personal services in a similar way to an employee? And if those tests are met, now the public authority has to deduct pay-as-you-earn tax and employees' national insurance contributions, and they also have to pay employers' national insurance contributions on the payment that they make for the workers' services. So what has happened here is there's been a decision for employment status, but this is just for tax. It doesn't mean that the person has now become an employee for that end client, and that's a really important point. The new IR35 rules will cover agencies, and I've put an example on this slide where we've got the limited company as before, but they're going to contract with an agency to get work. So the agency will pay the limited company for the work done by the limited company's worker. Separately, the agency is going to have a contract with a GP practice, and the contract will say that the agency will provide a worker, and the GP practice will then pay the agency for that worker. If we have this situation here, the new rules say that we still have to make a decision about employment status, and because the end client is a GP practice, they're a public authority, they're the ones who still have to carry out this status review. They then have to tell the agency about the conclusion for that status review. And then the agency, being the one that's paying the limited company, they have to apply the pay-as-you-earn and deduct the employee's national insurance contributions and pay over employer national insurance contributions as well. It's important that this status check is done before the 6th of April this year, or if the contract is going to start later, it should be done before the start of the contract. So the people affected, we've got this notion of a public authority that the IR35 rules talk about. But the definition that the revenue is holding to is for an organisation for whom the Freedom of Information Act applies. A lot of the organisations that are covered by the Freedom of Information Act are actually listed, and I've listed them out on this slide. But what we do know for a fact is that GP practices are included under the Freedom of Information Act, and so they are affected by this new IR35 legislation. And we've also got primary and personal medical service practices who are affected as well. Federations and alternative providers of medical services aren't going to be affected according to the BMA because they're not specifically listed in the Freedom of Information Act. The next person, and perhaps the most important person affected by the new rules, is going to be the person working through this intermediary business. Now, jargon changes, and we're on to our second version of IR35 since it started in 2000. So the bit of jargon I think that's pretty important today is the notion of a personal service company, and that simply replaces the jargon intermediary. And it's about an organisation, a business, where the worker is personally performing services or who is under an obligation to personally perform services for the public authority. And instead of it just being a limited company, which would be far too easy given its name, it's actually a personal service company can actually be a partnership as well, or even a limited liability partnership or an individual. The way to think about it is that intermediary or that personal service company is it's sitting between the worker and the client. One of the other changes that's been brought in by the new legislation is that the person who is providing the personal services, they have to speak to their payer and let them know whether they have a personal service company. And ideally, they should let them know what kind of personal service company it is. But as long as you let them know that you are working through a personal service company. If you're not working through a personal service company, you should tell them that as well. And that needs to be done before you actually start a new contract, or if you're in an ongoing contract, let them know before the 6th of April. If you don't do it, what will happen is that the payer is going to assume that you are in a personal service company, and they'll start working through the IR35 rules. So the all-important employment status, how do we make this decision about it? This slide that you're looking at just now is a screenshot from the Revenue's Employment Status Checker. It's a brand new updated service that they've brought out to help you actually make this decision about whether you're self-employed or whether you're employed. And the link at the top of the slide, that would just take you to it. I have to say that whilst it's a very helpful tool, it's helpful mainly because it tells you how the Revenue think. When you go through it, it's very easy to answer the questions in a very normal, thoughtful manner. However, the way the questions are worded is very important. There is no legislation that has been published in this country that tells you who is an employee and who is self-employed. The decisions that have been arrived at have actually been arrived at going through tax cases or going through employment law cases. And because of that, we don't have the legislation, we've got ideas, we've got concepts. What is somebody who is an employee? What makes them an employee? And what makes a person self-employed? So if you do have a go at this questionnaire, and I'm sure a lot of you already have, beware of the words because they will have a nuance that perhaps you're not appreciating. So there's a couple of concepts that may be helpful. They have come out from these cases, tax case or employment law, and that's if somebody is self-employed, They're actually in business on their own account. And if you're in business on your own account, you're going to have overheads, and you're going to make business decisions, and you're going to control your business, and therefore you. There will be a degree of financial risk. But if you're an employee, this is another very old concept, and I'm only throwing it in because I quite like the idea of the master-servant relationship. It's obviously completely outdated now, but it's a way of just reminding ourselves what an employee actually is. And if you are an employee, then you will have a master, and you will be the servant to that master. So in my case, BHP can tell me what they want me to do. They can move me from one job to another job. They could pull the switch on tonight's webinar and tell me to do something else. I've gone into this contract with them willingly. I accept my status as being a servant. I may well moan about it though, and actually I do, but there you go. But if I was in business on my own account, people wouldn't have that kind of control over me. So control is really, really important, but it's not the only thing to think about. Something that's very important, and which does crop up very early on in the employment status checker, is whether somebody can provide a substitute. So if I was self-employed and I'd agreed to do a session at a GP practice, but couldn't make it, would I have the right to put somebody else to provide a substitute, also equally qualified and approved by the practice? If I've got the right to do that, then that really is a strong indication that I'm self-employed. Other questions to think about is, how is that worker paid? They get paid for a session. The revenue thinks that's really in keeping with being self-employed. Whereas if you're paid by the hour, the revenue feels that's more of an indication of employment. But one question that we keep coming across is, what if I've been working for this practice for a long time? That is just one question in a whole series of questions that you need to ask. It's not key. It is actually quite neutral. The only reason it may have an effect, it may tip the balance towards employment, would be if you had been associated with a particular GP practice for a long time, to the extent that they started to have more control over you, or you perhaps became more integrated into that practice and how it was run. And if that's the case, then you could be considered to be part and parcel of that organisation. And that is an indication of employment. And you have to remember that employment status can change. It can morph from being self-employed to employed. So you need to be thinking about these kind of things as you carry on working with a particular practice. We also get asked a lot about whether doing regular shifts means that you're an employee. And again, it's just one of the factors to think about. I've put a few more questions on this slide, but the main thing is you can run through many questions. And in fact, if you do use the employment status checker, you may find that you're going through page after page of questions. But what the courts have asked us to do once we've gone through all of these questions is to stand back. You can't count ticks in terms of I've got 10 ticks for employment and 20 ticks for self-employment, and that means I'm self-employed. The courts have said, look at the big picture, stand back and look at it, and see what it's actually saying. And if it comes to a bit of a draw between factors of employment and factors of self-employment, the courts then say, have a look at what the intention for both parties was. Because if the intention for both parties to that contract was that it should be a self-employed contract, then the courts will hold that that should be the case. Is employment status inevitable? Well, hopefully through the slides that I've gone through now and talking about how you assess employment status, you can see that we're talking about agreements, contracts between two parties. And any party, to a contract, can actually try and negotiate a difference. So really, it doesn't have to be inevitable. If you start thinking about what kind of level of control the GP practice has over you, and other terms to that kind of engagement, you can see if you can negotiate a change to make it more in keeping with self-employment. Some of the things that are important are to think about whether you provide any equipment and materials for your locum session. And if you have to provide your doctor's bag, and there's lots of kit in the bag, like your stethoscope, an otoscope, blood pressure machine, and so on, then you are actually providing equipment. So if you get to that question on the employment status checker, you can say yes to that. Similarly, if you're expected to make home visits and get yourself there by yourself, then you're going to be providing your own transport to make home visits. A very important question, and it comes right back down to control. If you can be moved from one task to another task, that is an indication of control over you, which is more in keeping with employment. If you remember, I said BHP could ask me to stop doing this webinar tonight. That is the extent of the control that they have over me. But if I can turn around and say, no, I'm going to carry on, then there's a lack of control there. And remember, if you're ever asked to do something different than what you've initially agreed to do, renegotiate your agreement with the GP practice and make sure that there's a piece of paper that evidences that renegotiation, because that indicates that you cannot be moved from one task to another task. I'm moving on to the questions, and I'm going to have to be a bit quick because I've taken up more time than I thought. So let's get into a sole trader. I work directly for practices as a sole trader. Do the new rules apply to me? No. And the main reason is there isn't an intermediary being paid for your work. It's going to be you that's paid for that work. So you're off the IR35 hook, but unfortunately you're not off the employment status hook, because the revenue has always made the payer make the decision about whether they should treat somebody as an employee or whether they're okay to treat them as self-employed. It's the same employment status check as we've talked through for the new IR35. It's the same checker, so you can use that to come to that conclusion. And if the practice then decides that you should be treated as an employee, they'll put you onto your payroll. You should continue to invoice for the payment and submit your pension forms, and you can use My Locum Manager to do this. But you still have to remember to tell the practice that you work for that you don't work through a personal service company, and do this before the 6th of April, before you start an engagement. I locum through an agency. Do the new IR35 rules apply to me? Well, there's two answers to this. The first one is no if you're a sole trader, and the second one is yes if you are working through a personal service company. So let's get to know the sole trader first. Happily, you're out of new IR35, but agencies have got special rules that they have to consider. If you are subject to supervision, direction or control by the agency or the end client, then as far as the revenue is concerned, the agency should put you onto their payroll, deduct pay as you earn and employee NICs, and pay employer NICs as well. So it is yes if you're contracting through the agency with your personal service company, and as I said before, it's down to the GP practice to do the employment status check, let the agency know what the outcome is, and then the agency deducts pay as you earn and employee NICs. Again, issue invoices to the agency and submit your pension forms, and yeah, My Locum Manager will give you the tools to do that thing. I work as a limited company. Do the new rules apply to me? Well, I hope that you're all going yes at your screen, because that is the simplest example of what a personal service company is, and yes, the rules do apply to you. If the rules do apply, if the public authority decides that you should be treated as an employee, then what you'll have to do is provide them with your national insurance number and a P45 if you've got one for the current tax year, so that they can use the tax code on that. If you don't, they'll just put basic rate, deduct tax at basic rate from you. They have to give you a pay slip each time they run the payroll, and they'll give you a P60 if the engagement runs over into the new tax year, and they'll give you a P45 when the engagement finishes. Again, keep invoicing and sending in your pension forms. But you now want to take some money out of your limited company, so how do you avoid being taxed twice on this? Well, it's fairly straightforward. The amount that you get paid, either by the agency or by the public authority, that net amount, if you like, you can take that out from your company as a salary, or you can take it out as a dividend. If you're taking it out as a salary, you do need to put it through your own pay-as-you-earn scheme and just show that it's non-taxable on the FPS submission. If you're going to take it out as a dividend, you don't need to put that onto your tax return. And then for your accounts, make sure you show the net amount, the amount you actually receive. Show that in your turnover in the accounts, and then take it out as a deduction in your corporation tax calculation, and that will stop you getting taxed twice. VAT is as normal. We've also been asked about umbrella companies because they're being put forward as being a solution to get around the new IR35 rules. Well, I'm not really sure that this does work. Certainly, if an individual is contracting with an umbrella company, then the rules say that the umbrella company has to put that individual onto their payroll and deduct pay-as-you-earn tax and national insurance contributions. If the umbrella company is going to engage with the workers' personal service company, then what we've got is a new intermediary, so that the new legislation, the new IR35 rules are still going to apply. It's just we've got one more intermediary in this chain. After all that, what can you do if you're caught by the new rules? Well, renegotiate that engagement. That would be the first thing I would be thinking about. You might want to be taken on as a direct employee. It may suit you better and you might get a better deal out of it. So discuss the position with the GP practice. Or you may want to hold on to your self-employed status. And if that's the case, again, go back to the GP practice and try and renegotiate that engagement, given your new understanding on the factors that are important for making a decision about employment status for tax. Obviously, you can just accept the engagement and just take the application of the new rules. And if you're running your business through a limited company, you might want to think whether you need to hold on to that limited company. You may want to if you are working for any other businesses that aren't public authorities. You could turn the engagement down, and that's obviously down to you. But if you just disagree with the employment status conclusion, your choices are really a bit limited, because you can't take this up and appeal against the decision with the GP practice, because there is no legal mechanism for that. The only way you can do anything is to wait until the end of the tax year when you've sent in your tax return, and then send a letter to the Revenue and ask them to pay you back the tax and national insurance contributions that have been deducted. But as this can only happen after you've sent in your tax return, it's pretty long-winded and it's down the line. And the Revenue, I will guarantee they will not come back to you very quickly. So it's going to be very much a long game. And that's all my slides. So thank you very much for listening. Obviously, if you've got any questions, please get in touch with my Locum manager or BHP. I'm going to pass back now to Serena. Hopefully we've had some questions coming in. Serena?
Hi, Christine. Yeah, thanks for that. Thanks for going through what is a very complicated process and quite a daunting process for locums like me and the locums tuning in. So we've had quite a few questions emailed in as well as posted on the webinar. So I'm going to crack on with those so we can try and get through as many as possible. So I'd like to start with, I'm not going to be able to read out everybody's names, but I'm hopefully going to be able to cover all your questions. So somebody emailed in to say, do the rules apply if the doctor is a company secretary, not a director to the limited company?
They can. There's never a yes or a no in tax. It depends. I'm sorry about that. Does the company secretary own 5% or more of the shares of the company? If the answer to that is yes, then yes, the rules will apply.
Okay, so next question. Somebody's asking, is it true that paying the national insurance contribution and the tax at source will automatically entitle them to paid annual leave, sick leave, death in service, etc.?
Absolutely not. This is all about employment tax rules. It isn't about employment law. The Revenue is very, very keen to say that they are not lawyers and they don't pretend to be. This is simply to decide how to tax somebody. All those things that, that the person who contributed was asking about, these are employment rights and they sit with employment law.
Okay, so next question, somebody's asking, how regular is working regularly at a single surgery, and how much of a gap should one have to avoid being caught up in becoming an employee of a practice?
Well, in my slides, what I was trying to explain was you can work regularly for a practice. Just because you do work regularly for a practice, that will never decide the case that you are an employee. There is a big rumour about it. It's a little bit like what the man in the pub thinks, and the man in the pub likes life very simple, so sometimes the man in the pub says, well, you've been there doing the same kind of Wednesday afternoon session for the last 6 months, you've got to be an employee now. It's not true. You have to go through all of the other questions and build this picture. It's to do with control. The reason sometimes the Revenue might even suggest that working regularly for the same person makes you an employee isn't for any other reason than that if you do work regularly, you may end up having more control exerted over you.
Okay, I see. So I think that's been a common theme in the questions coming up, because I think a lot of locums tend to work for maybe 1 or 2 practices quite regularly, but they're still working in a self-employed capacity. So they'll bring their own equipment to work, they will say what hours they can and can't work, they will decline work if they feel like they don't want to work on that particular day that a practice is asking them to cover. So you're saying just because they're working at practice A and practice B regularly, that if they are still deemed to be self-employed according to the HMRC checker, then they don't have to worry about being caught up in these rules if they are a sole trader.
Yeah, that's absolutely right.
Okay, I can hear the sigh of relief coming across a lot of the locums tuning in, including myself, might I add. Okay, so next question. Someone else is asking, with the new, and I guess this kind of carries on from what you've just been saying, and there may be a little bit of overlap with some of these questions. So with the new IR35 changes, is anyone better off being a short-term locum rather than a long-term locum, as long-term locum employers are keen on coercing doctors to go down the salaried or partner route? So that's one question that's been posed.
Well, I think that's really a business question, because in terms of employment status, it's, as we discussed before, however long you work for the same practice, that's only one factor and lots of factors. So perhaps Jenny or Colin would like to answer the question about a short-term locum or a long-term locum route.
This is Colin Hall. Yeah, it is a business question as opposed to tax. It depends what career route the GP wants to take. So if you're looking at the locum route, it really is down to the individual to decide what their goals are when they're operating their business. Are they looking for long-term partnership, in which case often they'll go in as a salaried GP, get a feel for the business that they're working in, perhaps for a year, and then make a decision as whether or not they want to go into partnership at that point. So really this is more of a question to look at from a job point of view rather than a tax point of view. Would you agree, Christine?
Yeah.
Yeah. So it's career prospects, really, what GP is wanting to do.
Okay, so someone else has posted, if an agency says they're going to pay me in gross as they deem they don't come under IR35, am I safe?
Yes. Yes. I'm sorry. I've just had a pop-up about my my laptop. Sorry. Yes, so if the agency deems you to be not covered by IR35, are you safe? Yes, you are, because actually it's the payer, which would be the agency, that is at risk for a wrong decision, and the revenue would go to the payer, which in this case would be the agent. I think the question was
if the agency says what they're going to do is just pay the locum in a gross fee, because so you're saying that, okay, that it's the responsibility of the agency to make that decision, so locums don't need to worry that they'd be caught short.
That's right, yeah.
Okay. Okay, next question. Gosh, we've got quite a few questions. Okay, that's already been covered. So sorry, that's a repeat of the question. So is it true that IR35 only applies if you work through a locum agency or if it's a long-term locum? And what about working for an APMS surgery?
Okay, so we'll do the APMS surgery first. The BMA's blog is of the opinion that an APMS surgery isn't covered by the Freedom of Information Act, and because of that they're not a public authority. So if we start from that point of view, if you've got a locum working through their own company and they're working for an APMS surgery, the APMS surgery does not have to apply the new IR35 rules at all because they're not a public authority. But that doesn't remove the IR35 responsibility from the personal service company, not the locum's company.
Or the limited.
So they have to apply old IR35 rules on that, and that means looking at the engagement that they've got with the APMS surgery and doing an employment status check on that.
Okay. So moving on to the next question, we've had a few questions saying if a locum is paid by the hour, does that mean they're classed as an employee? So therefore, I think what they're trying to ask is, does the mode of payment, so should you be paid, to try and avoid getting caught in this legislation, should you try and charge by a session rate, or is it okay to still carry on charging at an hourly rate?
Well, if I was sitting in front of you this evening as somebody from the revenue, I probably would say, oh, well, yes, I think people who are paid by the hour are more likely to be employees. And that's definitely the revenue's opinion. But it's a silly opinion, because if you think about solicitors who are self-employed, they will charge by the hour. So there's no reason for them saying that. But they have quite an idealized version of what an employee actually is. And if somebody is being paid by the hour, the way employees often are, they feel that this is an indication of employment. In reality, it's simply a way of being paid, and I would say it's actually a neutral factor. There's lots more important questions and things to consider before making that decision about employment status. The first one will always be about the control that is exerted over the locum, and the second one is whether that locum actually has to provide personal services or whether they can provide a substitute. If they've got the right to provide a substitute, then the contract cannot be for personal services. But you need to answer all of these questions and then just stand back and look at the big picture. So the short answer is, being paid by the hour is just one question to answer, and it is not ever going to decide an employment status case.
Okay, so I think people are safe to charge as they want to, essentially. Next question, somebody's saying, do I need to email all the agencies I work with to tell them about my employment status? So I'd probably pose this as, do I need to email all the agencies and practices I work with to tell them about my employment status, or do I wait for them to give me an updated contact before April 6th?
Well, I think it's a good idea to get in touch with all your agencies and all the practices that you work for, and it's your responsibility to let them actually know whether the new IR35 rules apply to you. So if you're working through, for example, a limited company, then get in touch with the agencies and the practices you work for and say that you are working through a personal service company and therefore the new IR35 rules will apply to you. If you're working as a sole trader, you're also supposed to tell all your agencies and practices and just let them know that you're working as a sole trader and that the IR35 rules do not apply to you. If you don't do it, then the agency or the practice is going to have to make a decision because they need to crack on and do that employment status check. And they'll have to assume that you are working through a personal service company. So yeah, get in touch with them, but it's their decision about the employment status, unfortunately.
Okay, and someone just wants some clarification. They've asked the question, if you're a limited company and working for 2 different practices, then would that mean that IR35 would not apply?
No, unfortunately not. If you're a limited company and you're working for 2 different medical practices, then new IR35 is going to apply. So the medical practices, you need to tell them that you're working through a limited company. The medical practices, each one of them has to consider the terms of the engagement and make a decision about the employment status aspect of IR35. And then if they think that you are caught by the employment status check, then each practice will have to deduct pay-as-you-earn and employee's national insurance from the payment that they make to you.
Okay, and just following on from that, someone has posted that that some of their friends and colleagues have done the HMRC check as limited companies, but it's come back to say that IR35 doesn't apply.
Well, that's great, but it's not going to be because they've done it as limited companies. It's going to be to do with the answers that they've given with the employment status questions, and that will be to do with being able to provide a substitute, what kind of control is exerted over the worker from that limited company, and all the other factors that I listed earlier on in the slides.
Okay, someone else has asked a bit about what you were saying about providing a substitute. They've said, so as a locum, I have to provide a substitute if I can't attend a practice so that as not to fall into IR35. Could you clarify that, Christine?
Okay, so in employment law, back at the beginning I said that employment status has just been decided through tax cases and employment law cases. And employment law cases have, they've basically stated that if you've got a contract that has to be for personal services, then it's more than likely going to be an employment contract. I am paraphrasing hugely. So the opposite is also true. If it's not a contract for personal services, in other words, if you have got the right to provide a substitute to do the session that you've signed up to do, then it can't be a contract for personal services. And that means it's less likely to be an employment contract.
Okay. Next question is, and this has been a popular one, is there any way to work under a limited company and avoid this new IR35 legislation?
Yes, I think there is, because we've got the freedom of choice. You know, when making a contract, when you set up an agreement with somebody that you want to work for, provide your services to, you are one party to that agreement and they are the other party. So I think it is possible for you to arrange that agreement so that you aren't going to be under the control of, if it's a GP practice, that you are going to be treated as somebody who's a sole trader, bringing in, selling your service as a sole trader and not selling your time as an employee. So have a look at that agreement and have a look at it with a view to going through the employment status checker, because you'll come across the questions about being able to provide a substitute, being able to turn sessions down, having to provide equipment or materials, being paid by the session. The big things to consider for employment status are always going to be about personal service and about control. So just look at this standard service level agreement that the GP practice is giving you, and just see what kind of deal it's going to give you for the services you want to provide, and see if you can't negotiate away perhaps some of the clauses that tie you in, rather like you'd be tied in as an employee.
I was just actually going to ask you about that, Christine, because on my Locum Manager we have a terms and conditions template and pro forma which locums tend to fill in, and they fill it in by kind of negotiating with a practice. So surely any limited company out there or long-term locum who's a sole trader but working at a regular practice can just renegotiate those terms according to the HMRC's checker and put them into this terms and conditions template, and then they have an agreement with the practice which keeps them in line with, you know, without falling foul of IR35.
Well, the short answer to that is yes, but just be cautious. If the revenue were going to check an employment status, and it's really popular with the revenue at the moment, what they'll do is, you know, they'll typically they would send a letter to the GP practice and say that they wanted to carry out an employer compliance check, and then during that employer compliance check, they'd ask about any payments being made to people who are self-employed. And with the new IR35 legislation, they're now going to be asking whether there have been any payments made to limited companies or partnerships, basically payments to people that haven't hit the payroll. And they will ask lots of questions of the GP practice, and the questions they'll ask will be to do with the employment status, the questions that I've listed out on my slides. Now, if the locum has simply printed out a piece of paper that's been amended so it's in keeping with the revenues idea of somebody who's self-employed, but that doesn't mirror the reality, then it actually isn't going to be worth the paper that it's written on. And the revenue will go to the GP, the locum, and they will actually ask them the same questions. So it needs to be a frank and open conversation, a two-way conversation about how that service is going to be provided in a way that suits both parties.
Okay, that brings me on to the next question that's been posted. We have a salaried GP who also does locum sessions as required. How do we stand here?
Well, if your salaried GP is providing locum services to the same practice, then I think, and apologies for this, but I'm going to put my revenue head on, I would make a strong case that those locum services should be treated as extra or additional salary from the same practice.
Can I just ask Christine, does it make a difference? Because I think we're talking of an issue where the GPs working over and above the conditions in their employment contract, extra hours. Does that make a difference?
No, it doesn't. That's just overtime.
Okay.
The reason the revenue take this view is they take the view that if you're an employee and you're going to get a different duty or extra hours, you wouldn't have got them if you hadn't have been an employee in the first instance. Now, I say that, and this is the revenue's take on the subject, but I am aware that with schools and with academies, you get certain people in the school, and it could be a teacher or it could be somebody in the office, where they've got their normal contract of employment, but then they're going to have a separate contract of employment, and it's the same employer, but to do different duties. Now, it has been accepted by the revenue that if you've got two separate contracts from the same employer, then that can work. But the revenue's opening position would be, for that particular situation, that the out-of-hours locum work that the GP is doing, if it's paid by the same GP practice, that should be added to that salaried GP's salary.
Okay, so someone's asking about does booking work through like online locum platforms like Network Locum, does that go under IR35 because they don't term themselves as an agency? So where does like a locum booking platform stand?
Well, does the locum booking platform pay the GP, and is the GP a sole trader or is the GP working through an intermediary business?
Okay.
I don't know that. Yeah. Do these online platforms, do they actually pay the GP?
I think some do, and others have to be paid directly by the GP practice, I think. I think it just depends on which platform you're using. So I guess the answer to that would be
follow the payer. So if the online organisation, if they're going to pay the GP, and the GP is working through a limited company, then that online facility is an agency, the way I've referred to agencies on these slides. But if the GP practice is going to pay the GP direct, then IR35 responsibilities shift to the GP practice.
Okay. Someone's asking, would an out-of-hours service be being provided by a private company be considered as a public authority?
Well, that's a really good question, actually, and I've been scratching my head a lot about the Freedom of Information Act, not least because it's even more boring to read than tax legislation. Happily, I came across something from an out-of-hours organisation here in Sheffield, and they'd had a review by the Revenue a few years ago into employment status of GPs who provided their services on an out-of-hours basis. And the Revenue accepted that the GPs were correctly treated as self-employed. So if we can go back to your question, can you read it out to me one more time, Serena?
Yeah, sure. Just got to find it. So would an out-of-hours service being provided by a private company be considered as a public authority?
I'd have to say, if it's a private company, the answer to that is no. But if that service is going to be routed through a public authority, then we might end up with a chain situation that would draw it within the new IR35 legislation. Unfortunately, it's quite complex, these kind of situations, because they do tend to introduce a third or even a fourth or a fifth party to the contractual chain. So I can't give you a yes or no answer, but hopefully I've given a couple of ideas.
Okay, so just last couple of questions now, because I know we're running out of time. Someone's posed a question about substitute. So if they're ill and unable to work, do they need to provide a substitute?
No, you don't have to, but if you've arranged it so that you've got the right to provide a substitute in that situation or any other situation, then that would be a strong indication of self-employment. So if you want to be treated as self-employed, then yeah, I think you want to think about being able to provide that substitute.
Okay, and next question. So is the work carried out before the 6th of April, but then billed after the 6th of April, affected by IR35?
Unhappily, yes, it is. If you've got a contract that's going to straddle over into the new tax year, obviously the requirements to review that contract and the contractual arrangements can't apply, but what the legislation is saying is you still need to carry out this employment status check before you make the first payment in the new tax year.
Okay, great. So I think just to summarize the key points as we come to an end. So from your talk, and Christine, correct me if I'm wrong on any of these points, but the first step that all locums, whether you're a limited company or a sole trader, what you should be doing is emailing the practices and the agencies that you work for and telling them what your status is, whether or not you're a sole trader or a limited company, and do this before the 6th of April. The second thing is,
absolutely.
yeah, so the second point, take-home point from the presentation is do the HMRC checker yourself and then compare it to what your agency or your GP practice is saying, and by all means run through it with your accountant as well. But just so you have done it yourself, you're not just falling in line with what a practice or an agency are pushing onto you. Would you agree with that?
Yeah, I think that. Yeah, definitely. Yeah. It's a very good idea.
And there are some key points on that HMRC checker about carrying your own equipment, about having a say in how you work, so the master-slave situation that you said, which are really important for locums, whether or not you're a limited company or a sole trader, for them to acknowledge in that online assessment.
Definitely, yes.
Okay, and then point number 3, it does not matter if you're doing regular work at a practice. What matters is if you're deemed to be working as an employee.
That's it, you've got it.
So if you're a salaried GP and you then do locum work at your practice where you're salaried, you're saying that would actually fall within this IR35 remit. But if you're no, okay.
No, if you're a salaried GP at a practice and then you do out of hours work for that practice, then
not out of hours, you're doing locum work, so you're doing additional sessions, but as a locum for that practice.
Yeah, sorry about that. Yeah, the locum work that you're going to do for that practice, in addition to the salaried work that you do, the revenue would argue strongly that the locum work was actually just an extension of your employment contract, and it should be put through the payroll along with your salary.
Okay, and in the same way, if you're a locum and you regularly were locum at practice A and practice B, but you're not working as an employee because you're providing your own equipment, you're sorting out your own travel, you have say in how you work, where you work, when you work, then you cannot be deemed as an employee, but you should still do the HMRC checker and discuss it with the practice to make sure that you're falling on the right side of the HMRC.
Yeah, I think that's a very good idea. Do that, and it gives you an opportunity to negotiate if you need to negotiate with that GP practice.
Okay, and if you do fall within IR35 and you have your tax and your national insurance contribution taxed at source, it does not mean that you have any employment rights such as childcare vouchers or annual leave or sick leave or death in service.
That's right. It's just about employment tax and national insurance.
Okay, and everybody who is currently working should actually put in their invoices before the 6th of April to stop them being affected by these changes.
Yeah, that's a good idea.
Great, okay, thank you. Well, thanks everyone for tuning in. We really hope this has been useful for you. If you have any other specific questions about My Locum Manager or about the new IR35 and how it may affect you, there's email addresses on the slides right now, and you can contact them. If you enjoyed this webinar and you want to keep up to date with further information, you can like us on My Locum Manager Facebook or on the BHP Chartered Facebook account as well, and follow both companies on Twitter. Thanks very much.
Bye.
Bye.